What's up, guys, and welcome back to Rougefx. I hope y'all guys are having a very good start to your year. Very great start to this current quarter. As always, it is great to have step-by-step rules or maybe a checklist to ensure that you are obviously on the right path. You are, obviously not getting distracted by one unnecessary price movements, thought patterns, distracted by little ticks, or worse, get lost on the lower time frame trying to identify your overall range. As a Forex trader, these are the mental obstacles that you face, not only mirroring or reflecting off of the chart. However, you got to understand as you're making these keen decisions, trying your hardest to stay very much, or I should say, pay very much close attention to detail. It definitely helps to have maybe a game plan, or in whichever case, a trading plan, something to refer to when you are looking for your setup, or a specific setup, because there are many of them, as well as remembering which type of inducement you are looking at or looking to anticipate. Pretty much what I'm trying to say or kind of get through to you is there is a plethora of opportunities that can take place within these markets. This market is an ever changing, in whichever case, this market is very much multidimensional and very much has a tendency to flip the script at any point in given time, whether that be from an FU candle, maybe there is a gap that just magnetizes price in a bit more of a, I guess you could say, aggressive or volatile behavior. It's all a part of the overall plan. It's all a part of the overall algorithmic program that the market is very much running off of. It is very much possible to be sidetracked and thrown a bit off guard just by how price is moving. You can very much be anticipated, or not anticipated, I'm sorry. You can very much be intimidated by certain ticks that may be going against your position. I mean, let's be honest, whether you're in profits or price is about 4 pips away from your stop loss, it's a very much uncomfortable feeling to be managing risk in general. That's why it is very much a skill set and something that must be learned as well as embraced through experience. If you don't get anything from this video, understand that Forex trading, or trading in general, is very much practice, 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 and then practice some more, right? And with those practices are very much going to come, or with those amount of attempts that very much come with practicing, you're going to fail. And that's the thing, and why it's so very much important to manage your emotions, because as you're spazzing out, or as you're emotionally imbalanced, you're missing a pretty important opportunity to learn that lesson, of course. To in a case, sit back, in whichever case, sit tight and observe what's actually going on, right? Even after your stop loss is being hit. And if you look left, you're going to understand why your stop loss is getting hit. And as you understand why your stop loss is getting hit, you can very much take necessary precautions for very much avoiding such petty or unnecessary losses. Before we get started on this rule-based trading checklist, go ahead and subscribe to the channel, because we do aim to post consistently. Hit that like button, ring that post notification bell, because it only means you stay updated on all our videos. Without further ado, let's get started. So the first thing we're going to have on our checklist, or our rule-based trading checklist, right, is pretty much focus on market structure being presented, because that will provide your overall directional bias. This is, of course, will be done on the higher time frame. The lower time frame always will give you the wrong bias if you start there. It's just a heads up. I'm just letting you know, if you start in the lower time frame, you're probably going to get the wrong range. Not necessarily because you're obviously doing it wrong. Well, in a case, you are definitely doing it wrong. However, you're going to get the wrong bias because you're operating off of a, in many cases, counter trend trade. So of course, when it goes in your favor, understand that that's price usually just retracing or taking out internal range liquidity, which in whichever case you, and obviously you become the liquidity by not obviously in whichever case closing your trade out in profit, or setting that break even, or of course waiting on your overall opportunity with the pro trend. As you can see towards the left, we do have a case of pretty decent market structure. So as you can see, referring to our, in this case, illustration towards the left, we can very much identify market structure. This insinuating the low, high, a lower low. We have a lower high because this high is lower than the previous high. Next, we have a higher low, which led to an overall lower high, resulting in an inevitable lower low. Next on the checklist, once you located your overall price movement, you've understood that price is, in this case, very much bearish. Now what you want to do is focus on your QMs, in this or whichever case, your protected highs as well as lows, and or strong highs as well as strong lows. Remember, focus on your QMs. So whichever case, whether it be your protected high or strong high towards your weak low, or your protected low or strong low towards your weak high. So in this case, what makes a QM? Price has to obviously perform a liquidity grab and a break of structure that makes this our strong high. Price continues, melts down a little bit, just a little bit, retests, fills in any kind of inefficiency gap towards the left, fails to break this overall low, again establishing a higher low. In this case, price took out liquidity towards the left, and before you knew it, price was already on its way towards this weak high. This establishes our overall weak low. Our overall range and or directional bias is very much located. Now at this point, you want to locate liquidity within your range, right? Whether that be equal, slanted, higher lows, trend lines, liquidity pools, imbalances, price inefficiencies. There's very much more as far as potential inducements, as well as fib retracements. Understand that it's going to take time to, reach overall mastery as far as, locating your liquidity or locating your range and or locating your point of interest. That's very much significant. So in this case, price could act as, or this high or weak high could act as a weak high and or target, right? And that's where we would get our overall pro trend entry, which would obviously be the absolute next protected high. Maybe there was a price imbalance or price action inefficiency. Price retested, filled in the liquidity void, or I guess the void within liquidity, continue lower. It's very much possible. Maybe before, the range even started, the price had initially built up liquidity, rated that or manipulated out of that liquidity, retested that liquidity, obviously left a consequent encouragement, or in whichever case, an inducement, continued, failed, as well as swinging towards higher pricing, obviously mitigating this overall point of interest, which happens to be what? A fair value, or maybe on the higher time frames, a liquidity void. It's very much possible. Maybe price used this, maybe price equilibrium as well as the inducement to create a bit of a slanted low pricing. Or maybe there is actually a structural high hidden right here in maybe a pretty obvious rejection block, right? Maybe a rejection block wick is kind of just sitting right there. Price can definitely mitigate any kind of price above this entry, makes it very much premium, makes it very much in whichever case, a very much valid key level. Price reacts and continues lower. It's very much possible. These are just a couple examples as for how internal range liquidity as well as inducements coincide with your overall point of interest, as well as the range cycle, as well as your range, period, right? Your overall pro trend range. And of course, counter trend opportunities are very much available. Once you have officially located your liquidity or inducement, confirm this as valid by identifying your point of interest price is reacting from. In this case, your POI would, act as a Fibonacci or key level, order block, breaker block, rejection block. It is important to understand that liquidity will be below as well as above your point of interest, right? So in this case, price is, in a bearish trend. It is important to understand that at many times, price will have a point of interest above any kind of designated internal range liquidity inducement, understand that for it to be valid, there definitely, or I should say, for the point of interest to be valid, there should definitely be internal range liquidity below it. What does that mean? What that means is if price is reacting or basing its volume within this range off of this significant POI, which happens to be in this case maybe a order block, it's important to understand that if you have a POI below here and there's no internal range liquidity, understand that there's a good chance price can definitely just take off towards the highs. However, if there is liquidity located beneath this bottom POI, it is very much valid for a entry, or very much a valid high or a protected high or a strong high, right? Now, say you have 2 point of interest and you're trying to figure out which one is actually the valid one. You know, it is important to understand that if price has liquidity towards the left, all the way up here, and price is retracing from this higher low, price has all right to raid or liquidate any kind of low that's actually below this inducement, right? Because this is the inducement, this is the liquidity. So if price performed a, in whichever case, price performed a equal high above this, or say just below this point of interest, I'm talking about the top one, please don't get confused. Understand price is going to eventually come back and raid, or I should say liquidate those buy stops, trigger them on, and then take them out. Pretty simple. This is rule-based trading. This is how I do it. If you do want any kind of more information, I encourage you to subscribe to the channel, as well as, take a look within my official subscription-based membership. We offer bi-weekly, we offer monthly, as well as yearly, including lifetime services. My goal is to make an impact. My goal is to help you guys achieve your highest potential within these markets. And of course, it is always good to have a trading plan, or, and in this case, a rule-based trading system, or a set of rules that you can definitely follow, implement, as well as practice throughout your development, of course. If you did enjoy this video, be sure to hit that like button, ring that post notification bell, stay updated on all our videos. I do appreciate every one of you for tuning in on the daily, very much consistently. I appreciate everyone who subscribed, well over, or I should say, well on our way to 1,000 subscribers. I do appreciate the love and support. It means the absolute world, and only motivates me to continue to walk this journey, right? This journey of mine that I've been, at this point, it's more of a dream, right? So walk this dream of mine, or I should say, live this dream of mine, to impact the lives of others, especially when it comes to Forex trading. This industry is very much precious to me. This industry honestly carries the utmost potential. I'm just really just waiting on the people around me to realize that this business will be very much respected one day, into the highest degree. Until then, we carry on. We continue impacting other people, changing perspectives, awakening people that are very much lost in this reality, trying to figure a way. I'm living proof that, there is a way. And for me personally, my, I guess you could say, my truth, there's definitely a way. That way is definitely not going to come easy. It takes, hard work, discipline, passion. Did I say discipline? I'm here to help you realize your fullest potential in Forex trading. If you do want to learn how to trade like this, I do offer one-on-one mentorship. We can definitely get down to how, or I guess you could say a breakdown of how I actually approach the markets real time, as far as, on the daily basis, or I should say weekly basis, from our higher time frame, daily 4 hour, 1 hour, all the way towards our 15-minute, or in this case, lower time frame, 15-minute, 5-minute, and 1 minute. For those who have definitely made it this far in this video, I do appreciate your support, your love, your likes, your comments are very much appreciated and very much uplifting. Understand that I am continuously learning, continuously trying to, improve my overall skill set, not only, when it comes to Forex, however, as well as YouTube, speaking, very much trying to articulate my words, especially without, a occasional stutter. This, that, and a third, of course. Again, the love and support is very much appreciated. Without further ado, let's get started. Our first step, or I guess first thing that we're actually going to pay attention to, is obviously the higher time frame, right? Because it gives our overall directional bias, as well as gives us a fair chance to maximize our profits as much as possible. So the first thing we're going to pay attention to or revert our eyes to is going to be very much the daily chart, right? So on the daily chart, you're always going to identify your previous daily candle, just understand what, or in this case, pretty much just understanding what the previous trend or the previous, I guess, next or previous 2 days in this case, what kind of trend was that actually presenting, right? Which in this case, as you can definitely see, if we're going to take this order block as a actual daily candle, you can definitely assume in this case that price presented a bullish setup or a more of a bullish intent by the way it left a weak high as well as providing a strong low. This is looking left to understand what happened in the previous day, not necessarily the previous year, the previous date in time, the previous high of a certain this, that, and the third. No, this is just understanding that one, of course, we're thinking in probabilities, and two, comprehending that these are daily candles, which means there's actually time that's going to have to take place in order for these candles to, open and close, open and close, open and close. In that case, we need to consider these candles, especially when it comes to the previous 2 or 3 candles that very much indicate maybe a correctional bias that left liquidity above maybe this high, indicating maybe a weak high. Price decides to accumulate or build up liquidity. We manipulate out towards sell side liquidity. You can very much see that there's definitely a trend line or slanted highs right there, as well as price continuing an overall trend, right? So in this case, this would act as maybe a weak high that gives price all right to definitely continue towards this external range liquidity, or I'm sorry, in this case internal range liquidity, but of course it depends on your overall range, obviously on the time frame you're actually trading on, right? Or your setup is actually presenting itself on. Next, we're going to drop down to the 4 hour. This is where you would be doing the most or the bulk of your searching for liquidity inducements. Just, not necessarily to trade off of, but rather to draw towards. In whichever case your position is right here, you're probably going to be looking for liquidity towards the downside. If in whichever case your position is right here, you can definitely recognize that price has obviously definitely establishing a weak low. Where is liquidity? In that case, well, we got a strong high, weak low. At the very least, price is going to come back and fill in this overall gap in price. Whether it's a inducement or a fair value equilibrium touch, or fills in all the way, maybe even 100%. It's just understandable that it's very much present. Liquidity is very much present. After that, you're going to drop down to the 1 hour. This is where you're going to monitor how price is responding to your point of interest. To the left, is price fighting your position, or is it going to flow overall with the market structure that's definitely being presented, right? As you can see, we have 1, 2, and you can say 3 touch of this trend line. Are there wicks being presented reaching for overall, in this case, highs towards the left, maybe inducement, or I should say performing an inducement towards the left? Or has price established a consolidation and or liquidity pool where price is merely establishing a near miss position, or in whichever case, actually respecting the trend line? Maybe price formed a certain price action that would indicate that this would be maybe a bearish rejection block wicking towards the obviously buy side liquidity as well as sell side liquidity. Understanding that there's definitely any kind of liquidity towards, obviously the initial weak low. Price in this case breaks, officially providing a break of structure all price would really need to do was, of course, retest, take out internal liquidity, and continue towards the lows, confirming our overall second touch of this trend line. As we obviously continue towards this overall week low, it is important to obviously monitor price and understand that price can definitely hold, price can definitely provide a mitigation or higher low in this case, or price can definitely continue towards the lows. It really just depends on market structure, obviously deriving towards the left, as well as identifying the higher time frame overall range, as well as liquidity that we obviously need to draw towards next. On the 5 minute, you're going to again monitor your point of interest, check for unmitigated wicks, as well as imbalances, maybe imbalance close price action, maybe an inefficiency or price inefficiency. This is what I mean by this, right? As you can see, price performed in this case, it drew towards external range liquidity of this previous range, which is perfectly fine. However, what people don't also, recognize that actually could have possibly been the case is price obviously broke structure. It needed to fill in any type of imbalance, or I should say rebalance off of, how should I say this? Because this is kind of next level, I can't lie. So as you can see, in order for this high to be considered a protected high, there has to be, again, a liquidity grab, break of structure. That would indicate that this would be a protected high or a QM. So for price to obviously break structure or break in this case, intermediate low or maybe even a major low, understand that price definitely took out liquidity towards the left. Price in this case broke structure. All it would need to do in whichever case is retest and take out internal range liquidity. How do you know where that internal range liquidity is? Obviously, it helps to know what are the types of liquidity or inducements there are. That's just studying on your own time. There are very very much videos on this channel that obviously explain in further detail these types of liquidity and as well as inducements, as well as a plethora of secret gems, in whichever case, concepts. However, you can see, or as you can see here, imagine if price performed a equal high and price took out internal range liquidity towards the left, which would necessarily be those equal highs. Understand that there would have to be a point of interest above this pool of liquidity, right? Of course. So maybe it would be considered a bearish rejection block, or in whichever case, price established an order block. At that point, there's three different point of interest to really go over, right? Being, actually, let me actually clean this up. I don't want to confuse anyone. Being your fib levels to the certain extent, or to a certain extent, right? And if not that fib level, most definitely this fib level. So it's just important to understand your options, understand the various amounts of point of interest as well as POIs to look out for, right? And obviously coincide as well as embody and make yours, because this is your trading plan. This is something that you're going to have to build that overall faith, strength, and courage to carry out your journey, because it is very much a journey. I mean, you're going to have a lot of success, you're going to have a lot of failures, but you need that. But you need to understand that it is a part of the process, and you very much need to trust the process, especially in this game, because when your breakthrough does happen, you will understand why it is you had to go through the many things that you obviously had to go through. The 1 minute is going to be strictly for execution. This is where you will establish a correct range based off of the market structure this lower time frame point of view is providing. As the market structure is fractal, understand that as you grow to identify the correct range, more times than not, you will increase your win rate. This market, as well as liquidity, is fractal. If you can learn to identify both of these on the higher time frames, as well as obviously the lower time frames, the very prestigious gifts you are trying to acquire, as well as this being skills, they will eventually develop themselves over time. So again, in whichever case your higher time frame becomes this, or definitely any kind of obviously setup, of course. However, in whichever case, I'm gonna say this again, in whichever case is your higher time frame setup the same as your lower time frame setup, which at times it will occur, understand that it is approached the literal exact same way as your higher time frame setup. And don't get me wrong, don't be confused. Just understand that as you approach your range, of course, your strong high, weak low, you're also identifying what? Your internal range liquidity, which identifies what? Your point of interest, which identifies, I mean, really you can definitely say, so say this is like the 1 minute, right? This is the lower time frame. You can very much target that low. So maybe it would be like a 1 to 2 or a 1 to 1. Understand you can definitely target this low or the low before that. Or you can obviously hold towards your 5 minute low or 15 minute low, or maybe your 1 hour low, 4 hour low, maybe even your daily, obviously being your higher time frame. Understand it is more risk to hold, or I guess you could say the longer you hold, the higher the risk, of course. Not necessarily risk on the individual, right? Because, I mean, in that case, you're holding in profits. However, understand that price is going to reverse eventually, right? Every trend must end, which I'm just understand that. Make that, if anything, make that a slogan, right? As you can see, price was trending towards the highs. In this case, a rally. Price descended. Price, obviously continued to expand towards the highs. Price descended, breaking two structural lows. Price rallied towards the highs. Price descended towards, obviously the low before that, or I guess you could say the previous low. Price ascended and then obviously descended towards lower pricing. Every one of these trends, whether you're on the higher time frame, trading on the lower time frame, right? These individual trends, or you're on the higher time frame, obviously catching, maybe this is a weak high, you can definitely target that. Maybe this is an imbalance, you can definitely target that. Maybe this is a weak low, you can definitely target that. Maybe this is an imbalance close price action, or imbalance and or inefficiency. It really just depends on your market structure. I'm just saying these are very much options. This can definitely be considered a weak low. Pretty simple. Target your low as well as, anything well off, because who knows? I mean, at this point, who knows if this range might come down here? Who knows if this range might come down here? Who knows if this range might continue and, obviously shape the same range it did before up here, right? At that point, we are obviously creating a higher low. At that point, we are obviously performing a failure swing, where at this point is liquidity. It's going to be these slanted lows. It's going to be this inducement. It's going to be this imbalance. It's going to be this rebalance. You really have to understand that trading is an art. Trading is definitely something to be, honed, to be worked on over time, developed over time, to be loved or at least passionately, cared for, because that's exactly what it's going to do for you. It's going to love and passionately care for you as long as you obviously maintain that balance, or at least enough balance to definitely maintain a lifestyle that really encourages risk, as well as calculated risk, and risk that's very much simple to comprehend, right? To an extent, right? So again, with practice and really just a overall understanding, this is very much possible, and it's obviously placed in the most simplest approach possible. So I do encourage anyone and everyone to definitely join the subscription-based membership down in the description below, as well as if you are intrigued or obviously interested in catching some one-on-one mentorships, I do offer 3-hour sessions. Definitely, again, join the private community down in the description below. This is very much optional, as a lot of people would just like to join the subscription-based membership. However, if you would also like, most definitely schedule a one-on-one with me through the domain. If you haven't already, hit that like button. Most definitely subscribe to the channel. Until next time, I'm Jody FX. Y'all have an amazing night.